So welcome to Sotika Live Chat. I am Deborah Astin, and today I'll be talking to you, or I'll be taking you through the money market fund, and these are the things that we shall actually be having in this live chat today. Basically, I'll tell you, or I'll explain what a money market fund is, why invest in a money market fund, and money market fund save, and the interest rates considerations when choosing a money market fund, and last but not the least, the advantages of a money market fund. So let's start our discussion, and we'll start by what is a money market fund. Money market fund is basically a unit. It's a form of a unit trust, which is also a form of a collective investment scheme, what is known as CIS. So let me first give you a definition of what the CIS, the Collective Investment System Scheme. Sorry, Collective Investment Scheme. So a collective investment scheme is whereby investors have or investors pool their resources of their money together, and then that money is used, or the money now is invested into different asset classes. So I will draw for you a simplified form of a collective investment scheme. So this collective investment scheme is divided into two. This is a mutual fund, and a unit trust. So a mutual fund and a unit trust. So there's always there's just a slight difference on what are the difference between a mutual fund and a unit trust. So the difference is mostly what they are governed by. Mutual fund, this one is governed by Companies Act, and a unit trust is governed by the Trustee Act. So that is the only like the slightest difference between the two. And in Kenya, we find that these majorly or mostly we use now the unit trust, and the unit trust basically has like four categories. So the first one is the money market fund, the equity fund. So there's the money market fund, the bond or fixed income, and the last one is called what is known as the balance fund. So the money market fund is what we are going to be discussing primarily on this discussion, whereby it's a form of a unit trust, which is also or collectively known as NASA, a form of a CIS, which is the collective investment scheme. So the equity fund is investments on shares. This one basically deals with shares. The fixed one, this one is like now the government bonds. They invest on the government bonds, and the balance does both the shares and the bonds. So that's just a simple flow chart of a CIS, the collective investment scheme, divided into two. The unit trust at this one. So, but our discussion will be majorly on the money market fund. So yes, so in a money market fund, this one is managed by professional money managers, and these professional money managers, they now invest the money that is pulled in, and invest them in different asset classes that are available. Remember, different companies have different investment classes. Then, so in a money market fund, predominantly or primarily, they have three assets, what we call the asset classes. But now in a money market fund, they're known as money market instruments. So we have now the money market instruments. There are majorly three. But now this one I can't say there are only just three of them. They're like more than three, but I will most companies use three. The first one I will show. Remember, these are money market fund instruments. So the first one is the commercial paper. There is the commercial paper. There is the treasury bill. So there is the common paper, commercial bill, and fixed deposit. So I will just give you a brief description on now the three of them. A commercial paper is this one is governed or given by the corporates, whereby the corporates use it in a short term, and they give now in short term, so now they can be used in investments. Where now is where now the money market funds or the professional money managers use now the money and invest in it. The second is the treasury bill, or what people commonly know as the T bill. T like let me write it here. T hyphen bill. Now this is the treasury bill. Okay. So basically, a lot of people. This is I'll film another video explain in detail the treasury bill because a lot of people actually ask what it is, what does it entail, what does it do. So, but our T-bill is a short-term fixed income that is given to the government via the or through the central bank or the CBK. I will repeat it. So, a short-term fixed income securely issued to the government through the CBK, the Commercial Bank of Kenya. So, maybe now, I've actually said now, let me, this, I don't know if you quite understood what I mean by when I bring in the aspect of the money market fund instruments. So, I found an illustration that quite explains in a very, I don't know, an interesting way. So, assuming I have a pie chart or the things that the way it's subdivided. So, I subdivide this according to the money market fund instrument that I have. I will use the money market fund instruments that I have. That's the commercial paper, the treasury bill, and the fixed deposit. So I subdivide it into three. So this is the first, second, and the third part. So if I take a segment of this part now from here, if I take this part, now this first part, let me call it A, B, C. So this A contains now all the money market instruments. So this part A will comprise of now the commercial paper, the fixed deposit, and the TB. And this B part is also comprised of the three parts: the commercial paper, this plus. But now remember, this is not something that is fixed. Different companies have different instruments that they use to invest their clients or their people like you who want actually to literally invest in a money market fund. So maybe you're asking why the reason as to I keep calling them the professional money or fund managers. This is because these people are actually regulated or governed by the CMA. CMA. This is the Capital Market Authority. This one governs all industries or all companies that deal with what is it called? The investment. So this is more, I would say this is a government entity. Yeah. So basically that's one I can say what a money market fund is. And if you have any question, you can drop down in the comment section. I will be in a position to maybe help you out and to also clarify something that you haven't quite understood. So the next part is why invest in a money market fund? Why would you like leave all these other forms of investment and invest actually in a money market fund? One is their low risk investments. So the reason that the fact that it's a low risk investment is a safe avenue for you and I to quite invest our money in. The second one is less capital is actually required. You can actually invest with as low as 1,000 shillings. So if there you're asking, I have 1,000 shillings, like, or I have, pesa tu kidogo, and I want to invest. And probably you hear people saying, I've invested somewhere with 250,000, or I've invested somewhere with 50,000. But in a money market fund, you only need 1,000 Kenya shillings to start your investment. And the last one is cash equivalent, because it's easy to like withdraw your money if you just have to like notify different companies, like, I think it's 2 to 4 5 2 like 2 to 4 5 working days. But this is dependent on the company. There are companies where you just withdraw instantly. I ask, or I request for withdrawal. Sorry, I just like withdraw instantly. So that is why you should actually invest in a money market fund. But one thing that people you see, I mentioned investment, and everyone is like, it's not in a this money market fund is something that grows progressively, slowly by slowly, and it's not a rich scheme. It's not a get rich scheme whereby I invest quickly and I want to maybe get my money so easily and fast and get rich instantly. It's something that grows slowly because in a money market fund, the interest that they have is actually what you have, the compound interest. You know, kidogo kidogo, month by month, it accumulates, and that's how you end up growing your wealth. That's why actually, if you're listening to me and you're in your 20s, your 30s, start now, start as early as you can. Ukiwa campus, have that 1,000 Kenya shillings. Just decide this weekend with this 1,000 Kenya shillings, I will look for money market fund and invest my money there. Maybe even by the time you're clearing, or 5 or even 3 years or 2 years to come, your money has actually, or even an year, your 1,000 has accumulated money with compound interest, and you actually have money that you can actually maybe even buy something substantial for yourself or for your family friends or your family. So the third okay, now we're done. The third part is the money market fund safety. So on our third point, on our third part that forms our discussion, money market fund safety. Well, this is a question that most people ask, because it is true. I would not want to invest my money in a situation, or in a firm, company, or an organization that is not safe, or in an investment scheme or system that is not safe. So I think, or I know for sure, that money market funds are safe. One, the process, or the professional money market, or what I call them, the professional money managers. These other companies or other people you prefer using the word fund. So, sorry, fund. So the professional fund or money managers is governed by the CMA. Remember the CMA? This one is a body or a government entity that governs or gives rules and regulations to these organizations that offer investments. So it is safe for the professionals, or for you to invest your money on a money market fund, because any money market fund must have a professional money or fund manager. The second one, a custodian bank is involved. A custodian bank, its role is basically to hold money for investment, and also to release money when now you ask your money to be like, when you ask for withdrawal, your money doesn't come from the investor, it comes now for the custodian bank. So, and every custodian bank must be, even this bank must be approved by the CMA. It must go through this process, the vetting and everything must be done by the CMA for it to be actually be regarded as a custodian bank for the money market fund or that organization. The second one, also the third one, is the trustees. So the role of these trustees is actually to look out for the interest of you and I, who are the investors. So in case they find out that there's fraud happening, or malpractice or anything that is suspicious or malicious, they have to be the whistleblowers. They have to actually report because they are there as our, the ones who actually represent us. Because us when you invest our money, we actually don't actually like have it on ground, but they're the ones who actually invest to us. Do you remember the title that I said that is actually three that has different investment money market instruments? But remember, different companies have different money market instruments that they use. The last one is the auditors. So these auditors are also essential in any money market fund because you see their role is basically to, go through the financial statements and authenticate or ensure that everything is according to line. This is more of a transparency. So you might find people in when you're looking. Actually, I think it's the next one or this the other one, whereby I'll be giving you the considerations to look at. This is one of it. What is offered by these auditors, the statements, the financial statements. You find the financial statement in those organizations